And so we were able to sit down, and because we could do this, and I'm actually going to qualify that and say, I'm betting that if we didn't do this, would you have been comfortable taking money out of the business?
No.
Because
if we hadn't done that, well, I don't know. In my head, I feel very conservatively about the way that like we're building the finances in the business, and I've been a little bit more. It's funny to say I feel conservative, but we've been more aggressive with how we're dividing the money in the actual accounts, so that we're preparing for tax season, we're preparing for any unexpected expenses, and to me, it was just, let's get through to tax season, and whatever's left over, maybe we'll figure it out after that point.
And yet, what's happening in a week for you?
I'm getting married.
And how cheap is that?
Not cheap, as one finds out as they plan. It's funny. I thought that we had everything figured out. This is every single week.
There's something new.
There's something new.
And it's new money.
Yeah.
And I remember when we talked about it this beginning, because we work on your personal finances together, I said, I don't care what you have been told this is going to be, put a 10% buffer on it.
Yeah.
And that's what's kind of cool. The thing I want to share is that you would have been nervous to take any money out of the business because you wouldn't have been confident that the business wasn't going to need the money.
Yeah.
Because we spent that time together, and it was only an hour.
Yeah.
An hour since we've started the business where we actually really talked in depth about budget and dived into the receipts and where are we going to be and forecast the year. We literally were able to say, hey, you can take this much money, we can pay you this much money, and we'll still have enough money, even if we never got another client, which is not going to happen. But that's the way to be conservative, because we're both conservative. We can cover our expenses for X period of time. Hey, welcome back to the Cash Flow Podcast with me, Pam Pryor. Glad to have you here, where we talk about everything money related in your business. So without further ado, let's hop right in. Welcome back to a regular episode of the Cash Flow Podcast. The last couple weeks we've been rounding out the Know Your Map season that we did, where we got introduced to a number of the people on my relationship map, but now we're getting back to business. We're in the last quarter, we're coming in on year end, and we're going to talk some stuff every entrepreneur needs to know about their finances as we get into the end of the year. But first, we're going to go talk about a news story where there was free money for a little while and some of the repercussions of that. And then our beer has to do with the sound of music. We'll leave it at that for now and then hop into the news. So there's something going on called an infinite money lawsuit, where JP Morgan Chase is turning the tide on people who took advantage of this glitch that happened back in August. And back in August, apparently, there was something wrong with their ATM system, and it let people deposit a check and then right on the next transaction withdraw money from the deposit from that check. So you could have a zero bank balance. I won't say zero. You had a $100 bank balance, deposit a check that may or may not be a good check for $3,000, and then immediately take out $2,900, $2,800. And it all happened before JP Morgan had a chance to go, ooh, that check's not a good check. So they didn't get a chance to make sure it was going to actually clear. So word got out through TikTok, apparently, and lots of people exploited this until JP Morgan got it fixed, which was relatively quickly. But they are turning the cards on the fraudsters right now, and they are starting to sue people. And they're suing. What's interesting to me is how much money some of these people got out. And they're able, of course, to identify them. So in the average case that they're suing for, people got between $80,000 and $141,000 out of this glitch, just free money. And then the biggest one was, I think it said $290,000. So some really quick action from people based on a post from TikTok. But the monster's coming back to bite now. Here's the real story. Do we think that money still exists? Probably not. So I don't know that they're going to win or get a lot of that money back. I don't know what the total was. They don't say what the total was that they lost. They don't. But they are filing suits in Texas, Florida, and California, and to try and recoup. So if you're one of the folks who got some free money from JP Morgan Chase, you may not want to brag about it. But I also want to talk about checks. because this points out something that's really important. I'm just going to do a little aside here on the news story. Paper checks are actually one of the worst controls for your cash. And I know there's this old security blanket that a lot of people have around, oh, I want to use a paper check because it's not electronic and things can't happen to it. It's, it's paper. I know it's real. And the truth of the matter is those checks and the information on those checks can be lifted and used for massive bank fraud. It happens all the time, and it's one of the more frequent fraud leaks for people and money laundering leaks and all sorts of things. So just to put this in perspective, last year, so 2023, the estimated fraud involving checks, how much do you think that was, Francis, in total for a year? Strictly from people using paper checks.
1.5 million.
26.6 billion.
Oh, shit. Okay.
I'll leave it at that, and we'll move on to the beer now. I am so excited about the brews section because I am a Sound of Music geek. So I found the Von Trapp Brewery beer sitting in our shop right. And I didn't know there was a Von Trapp Brewery, and there is. Now, this is a little different for us because it's not an IPA.
This is true.
It's throwing me lager.
And I was just starting to get used to the IPAs.
Yep. But here's the thing. So Johannes von Trapp is the 10th child of the Von Trapp kids that were the family from The Sound of Music. And as the 10th kid, I don't know if you know as much insanely about The Sound of Music as I do, but there were 6 kids in The Sound of Music. 7. 6? 7. 6 or 7. I can't remember.
One or the other.
Apparently, I don't know as much as I think I know. And then when Maria and the captain got married, they moved to the States after escaping over the hills, blah, 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 blah. The hills are alive, blah, blah, blah. And when they got here, they had some more kids, and he's the 10th of 10.
Gotcha.
Johannes. And his son is now running this brewery.
Okay.
And the brewery is in Stowe, Vermont. There's a Trapp Family Lodge, Von Trapp Family Lodge there. And the cool thing about it is that they went back to Austria a lot after the war, and he loved German beer. And in the States, in like 2010, he's like, you know what? We're getting into all this hoppy IPA stuff. Guilty. He goes, I really miss the true German lager. So he went on a search in Vermont to find the perfect water to do these lagers and perfectly or on purpose leave out all the hops and stuff.
Gotcha.
So this particular beer, let's read about this beer because it is called the... Give me a second here. No, we don't have to open it with the spoon here either.
No.
Hang on.
It is the Radler.
There we go. The Radler beer is lager with grapefruit. Mm-hmm. Grapefruit is one of the fruits I don't mind in beers as a rule. It's a refreshing blend of a light lager with grapefruit, perfect for summer sessions, outdoor activities, and enjoying the day. So this is going to be a light, I'm anticipating a light sort of crackly beer.
Yeah.
Originated as a drink called Radler Mass, which is a cyclist leader. I don't know what that means. Created by innkeeper Franz Kugler in the small town of Deisenhofen, outside Munich. Enjoy our Radler on or off the trail. And it's in the market only from April 1st to July 15th, which is a little scary because it's now well into October. So I don't know how old that is. Its ABV, which is the alcohol content, is 3.9%.
So it's a little lighter.
A lot lighter than what we usually do with the IPAs, and the IBU is only 20.
My stomach is thanking you for that. Now that it's
that's recording time. It's after 5 somewhere.
Yeah,
it's after 5.
It's 10 o'clock here.
it's very early here, and they sell it in a 12-pack. So I am ready to take a peek and see what we think. I don't understand how there's any way I couldn't like a Sound of Music beer.
This is true.
Let's do this thing.
It does have a lot of grapefruit in it, though.
It does have a lot?
Well, that's like, it is the grapefruit, right?
Yeah, it is the grapefruit. Are you a grapefruit guy?
I am, but I feel like you're not as big.
I don't like fruity beer, but I like, of the fruity stuff, grapefruit's my favorite. So
you don't mind a shandy every once in a while.
I'm not going to hunt it down necessarily, but, hey, that's pretty good.
Okay.
Orange, if it gets too orangey, I get kind of wacky.
This looks a little hazy. Am I right?
You're right. It does. That surprises me. I'm expecting more. Well, you know what? I was thinking Pilsner, and this isn't Pilsner. This is It reads like a Pilsner,
Yeah.
but they said it's a lager.
It smells like grapefruit juice, like legitimately.
Oh,
it doesn't
it
smell like
does.
anything besides
Oh my
grapefruit
God, you're
juice.
right. Cheers.
Indeed. Cheers.
All right. Very fizzy. Definitely grapefruit.
It tastes like soda.
It tastes like soda.
Right?
It absolutely tastes like soda.
It tastes
When do
like
we have to
soda.
put you to the test here? Sorry. As our total non-beer drinker, when we have ones that don't really taste like a beer, it doesn't taste bad.
No, it's not bad.
Like, it's actually a decent drink, but it does not taste like beer.
This
at
is
all. It
this
tastes like
reminds me
champagne and
of-
grapefruit.
It reminds me of the mimosa beer that we tried a couple of weeks ago.
It's like champagne and grapefruit. Yeah. It tastes like a mimosa.
I like that.
Yeah. I mean, it's a
not
good
bad.
tasting drink. So Sound of Music, you didn't let me down. Very good tasting drink, but I would not... If this is what lager beer tastes like in Austria, it tastes different than it
You
did
would know
in
better
Germany.
than I did.
It did not taste like this in Germany. But this is a really good drink.
I mean, I feel like for me, this would be ideal on the beach.
Yeah.
You know what I
And
mean?
they call it a summer drink.
Yeah.
But it's kind of fun because it doesn't have... And you know what? Maybe it does taste like a beer, but we're so convoluted now because of all the hops
IPAs.
that we don't even know what... No, but Wen said
Yeah.
it doesn't taste like a beer. Okay.
It legitimately tastes like a soda. You know what I mean?
To me, it's like when I order a that breakfast drink.
Mimosa?
Yeah. Is it a mimosa? Yeah.
Mimosa's a champagne with a splash
The breakfast,
of orange juice.
yeah. That's what it tastes like.
It's not bad.
Mm-mm.
What's your rating? And remember, we
Well,
switched to scale.
interestingly, for all the wrong reasons, I'm going to give this a 4.
So that's like as high as it can be.
Yeah, it's not because it's a beer though. I'm giving it a 4 as a drink.
Yeah?
Yeah, as a beer, I would give it like a 2 probably because it just doesn't taste like a beer.
I feel like I know a lot of like people in college that would like get fucked up on that.
Oh, really?
Yeah. Because it's just really easy to drink.
Yeah, that's true. Although it's a really low APV.
It is low, but those are the ones that after you drink like 6 or 7,
then
it hits them all.
That's
you know,
true.
and
That's
everything
true.
hits you at
That's
one
true.
time. But I don't hate this. I kind of like it.
What are you giving it?
I'm gonna give it a 3.
Okay.
But that's like, you know, leaning towards a 4, and I feel like it's because I'm more accustomed now to the IPAs and the heavier
I've poisoned
beers.
you.
Yeah, you've corrupted me. And like I'm almost like missing that taste from this, but it was really, really nice and refreshing.
This is a good drink. Like this feels fine drinking at 10 in the morning.
Yeah.
Like it feels like I should be having like a poached egg or something with it.
Mm-hmm.
Nice job, Von Trapp.
Yeah.
The hills are alive. Cheers.
Have to hunt down some of their other
The others,
because they have a really big like catalog. It looked like
we have to road trip cash flow to Stowe, Vermont.
Okay.
Maybe we'll go this winter. We can ski. I have new knees now.
You can
Both
ski.
knees are bionic. I can ski again.
Have you ever skied?
Oh yeah. I was
Were
a
you
really
big
good. I
skier?
was a black diamond skier.
Oh, okay,
and loved it.
Yeah.
Loved it. And then when the knees went, I couldn't.
Then you were done.
Oh my God. It probably contributed to the knees because we actually went, speaking of Austria, I went for a ski trip in Austria once and it was so different than skiing in the States.
Oh, really?
So first of all, our hostel or whatever you call what we were staying in was halfway up the mountain. And then you took a trolley car thing, hanging trolley car on a string.
Yeah.
Cable car. Whatever they're called, all the way up to the top. But then it was a full day to get down the mountain.
Oh, wow.
Yeah. So like you skied for a while and then you stopped for lunch. And then you skied for a while and you stopped for dinner. And then you skied to the bottom and you had to take a car or something back up to the hostel.
Oh, wow.
So literally every run was a full day.
That's crazy.
Yeah. And you just keep going down. It was the best ever. You just keep going down and down. I was actually a little scared. I did not ski Black Diamond there because they have different they did. This was a long time ago. Different designations. So like I did more of their low intermediate.
Mm-hmm.
Their Black Diamond was like literally like when you look and you go off a cliff,
like
those things.
Drop.
Yeah.
You're like, I'm probably not going to live through this one.
I'm just jumping at this point. Yeah. So no, but theirs was like the upper part of their lower skill set.
Gotcha.
Thing is what I could do as a U.S. Black Diamond skier.
Interesting.
Yeah, but oh my God, it was so much fun.
I haven't been skiing as much as snowboarding. Snowboarding is
That
more
looks
my
like
thing.
fun.
Snowboarding is fun, but I will say that like from I used to skateboard and I've been surfing like a few times. Snowboarding to me was harder than skateboarding and surfing.
Really?
Yeah, which is weird because I feel like for a lot of people, surfing is probably
Well,
the hardest
surfing,
out
yeah,
of
because you
all
got more
that.
volatility. I would
Yeah,
think you can control.
but I don't know
Well, maybe
why.
it's more flexibility on the water. Maybe you can
Maybe.
push you can push the back of the board and go down. Like it'll respond more to your movements. Where on
Yeah.
snow, it's hard. You
And the
can't.
movements are a little bit more, I feel like, exaggerated when you're surfing. So it's like
Okay.
you're forcing stuff in and out as you're
Okay.
ripping through the waves. Where it's snowboarding, it's like you're just kind of gliding.
Yeah.
You know what I mean? And then
And
it's
2
like,
feet in one thing feels claustrophobic to me. But then I grew up. I mean, I skied in the generation where snowboarding wasn't a thing.
oh, really?
And then, so I was always on 2 skis, and the independence of each ski
Mm.
makes the concept of a snowboard feel
Weird.
claustrophobic.
Yeah.
But then I water ski too, and what's really interesting, I'm sitting here and I'm literally feeling the muscle movements on how to get up on water skis and how to ski down a mountain. Like it is not gone.
It's like riding a
It's like
bike.
riding a bike.
Yeah.
I would start on a bunny hill, mind you, because what will happen with that is you'll feel like you're still 20,
Yeah.
and your body is not 20
You'll feel like you're 20 until the moment you're off, you're done.
until your first fall.
Yeah.
And then you break a hip.
You realize, okay, I'm not 20.
I am 62, and
Yeah.
that's a broken hip. But I have no idea how we got off on that, but
Vermont.
fun little diversion. Yeah.
Yeah.
So cheers, guys.
Cheers. That was solid.
The hills
I'm really
are
happy with
alive.
that. Yeah.
I'm loving it. All right, let's move on to the finance business of the day, because we did some important things this week
We
in
did.
our partnership. And as you know, in this segment of the podcast, we're literally taking you step by step through starting a business, a partnership together, and what we need to do to make sure it works.
Yeah.
And really fun, important week this week. What do we do?
We went through the budget, the forecast, and we decided the payout.
Woo!
Love that.
So we had previously said, okay, we're going to have, with our partnership,
Yeah.
because I'm a more passive partner and Francis is doing all the work of the business. I'm doing a little bit of administrative stuff, but
And
the
a lot of
actual work of
coaching.
serving the clients and all of that is Francis. So we knew going in, number one, he has a larger ownership share, and number two, there's up to a certain level of revenue that we're going to pay you salary.
Mm-hmm.
And I say salary loosely.
Yeah.
We're not setting you up as an employee. We're paying you as a 1099 contractor.
Gotcha.
And so we were able to sit down, and because we could do this, and I'm actually going to qualify that and say, I'm betting that if we didn't do this, would you have been comfortable taking money out of the business?
No.
Because
if we hadn't done that, well, I don't know. In my head, I feel very conservatively about the way that like we're building the finances in the business, and I've been a little bit more. It's funny to say I feel conservative, but we've been more aggressive with how we're dividing the money in the actual accounts so that we're preparing for tax season, we're preparing for any unexpected expenses, and to me it was just, let's get through to tax season, and whatever's left over, maybe we'll figure it out after that point.
And yet, what's happening in a week for you?
I'm getting married.
And how cheap is that?
Not cheap, as one finds out as they plan. It's funny. I thought that we had everything figured out. This is every single week.
There's something new.
There's something new.
And it's new money.
Yeah.
And I remember when we talked about it this beginning, because we work on your personal finances together, I said, I don't care what you have been told this is going to be, put a 10% buffer on it.
Yeah.
And that's what's kind of cool. The thing I want to share is that you would have been nervous to take any money out of the business because you wouldn't have been confident that the business wasn't going to need the money.
Yeah.
Because we spent that time together, and it was only an hour.
Yeah.
An hour since we've started the business where we actually really talked in depth about budget and dived into the receipts and where are we going to be and forecast the year. We literally were able to say, hey, you can take this much money, we can pay you this much money, and we'll still have enough money, even if we never got another client, which is not going to happen. But that's the way to be conservative, because we're both conservative. We can cover our expenses for X period of time. So we were able to write you, have you go write yourself a check.
Yeah.
And that's why I encourage people, even as they're starting out, get your head around your finances, because this is money that essentially is going to help pay for your wedding that you would have had to put on a credit card and pay interest for another 4 months till tax time.
Yeah.
And then we would have been able to say, okay, let's take a little money. And I venture to say you still would have been nervous to take it out of the business.
Yeah. I mean, like even now it feels
like,
yeah, it's one of those feelings where I know that my CFO has given me the
nod.
go ahead and do it. But even then I'm like anxious to, press the button.
Have you done it yet? Did you deposit the check or make the transfer?
No.
You were supposed to do that yesterday.
I was going to do it yesterday, but I wanted to make sure everything was out of pending, all
Got
that
it.
fun
Yep.
stuff.
I love it. So, and this is the point.
Yeah.
Especially if you're conservative. Well, even if you're aggressive, actually, to just be able to see it on paper and know that you can go anytime and look at those things and go, oh, yeah, we're fine. Yeah. Oh, yeah, we're fine. We're good, as a matter of fact. We've actually left too much money in the company for taxes on purpose. Like, we know we're not going to need to pull that much out to cover the taxes. So, kind of just as a reminder, so this is a great year for the business. We started it in August.
Yeah.
And at the end of the first year, you're able to pull money out of the business as the owner. So congrats on that.
Thank you. I didn't expect that in any way.
Really, it's really unusual.
Yeah.
I mean, most businesses, you start up, you have losses the first few years. The fact that we actually have to put money aside for taxes is kind of awesome.
Problem to have. Yeah.
Good problem to have. So congrats on that.
Thank you. I think the other kind of thing to add into this conversation is just going through that process opened my eyes a lot to the behind the scenes aspects with the finances of things, kind of like what we were talking about. Yeah, because we basically sat down, just to give people a perspective. We sat down for like an hour and a half and just went through every single thing that was in and out of the bank account, that was in QuickBooks, receipt wise. We made sure that everything was matching, and basically I think it's reconciliation, right?
Yeah,
we just basically reconciled the books,
made sure we weren't missing anything, which was the key.
And going through one, I feel like that process, I guess my question before I dive into the benefit that I got was like, how often would you say you would want to do that as a business owner without a CFO?
All right, so ideally, if you want to get a bookkeeper or do it yourself at least once a month. Here's why. It took us about an hour to do it. We were doing 3 months worth of stuff. Relatively low volume of purchasing transactions because we have a lot of the equipment already.
Thankfully.
But for most businesses, just do it every month because it's fresh in your mind, and you just get it marked up. But that said, what happens with a lot of folks, and it's fine, is they wait till the end of the year, and then they got to remember stuff they did in January. The other big thing that helped us, and that I would insist on for any new business owner, is we have a separate checking account for just business. Even with that, there are times where we charge stuff back and forth from personal cards, but we're not going to remember that in December of next year. So to do it literally every month, it's like, oh yeah, I paid for this out of my pocket because that was the card I had with me when I was at the equipment store. We might not have remembered 12 months from now to charge that to the business.
That makes sense. Okay, so that's good perspective, because I feel like the big thing that I learned when we were going through this was working with you. I've always heard you describe your books and your forecasts and your finances as the story of your business, and I didn't really see that until when we sat down and did the reconciliation of the books and built out the forecast for the next year and figured out, you know, that I would be able to take a payout. Like, I didn't see the story until we actually sat down and did that part of it.
It did actually tell the story. And the cool thing about that is one of the next things on our list that we'll be talking about here too is we have to strategize for 2025. And now we have the basis for the strategy. So that's kind of cool. I'm excited about that.
I am too. I think that every time we've sat down and done like a really big session like that, what I've learned is it's not as high of a mountain as it feels like until, because before that you're building all this stuff up in your head.
Oh my God, this could be awful.
Exactly. I was like, I don't know if I put enough aside for taxes, even though you've been telling me this whole time, oh, you definitely did. You know, but I feel like there's all these things, the what ifs, the buts, all that stuff that you have until you sit down and you actually look at your stuff.
And you see that we're actually accounting for the what ifs and buts. And this is what a good CFO, a good bookkeeper will do, is they'll get to know you. You know, Francis, are you conservative? Are you aggressive? Do you want to risk needing to get credit? Would you rather not get credit? So once we know some of those things, so like it's pretty clear in my head from working with you, that we don't want to put stuff on credit cards we can't pay. We're going to grow at a pace at which we intend to grow. Now, there may come a point where there's an amazing opportunity and we'll do some borrowing, but it'll be structured. It'll be good interest rates. It'll
Yeah.
be all of those things. But and I'll probably have to talk you into it.
Yeah.
Right?
Yeah.
We'll have to prove there's a return to you so that you're like, okay, this makes sense. It'll pay for more than the interest. That's great. Other entrepreneurs are like, I don't care. I want to be as aggressive as I can. And what we can do with the forecast then is let them do that and also have a backstop.
Yeah.
You know, so it's a win-win no matter what the personality is, but it can be adapted. Because I want you making business decisions going, oh yeah, I know I've got this much in the bank. I know of that I can use this much because I know my forecast says this. So yeah, I can go outsource this thing.
Mm.
Or no, I'm going to do this one myself stuff.
I feel like the thing too that this has given me, aside from just perspective, is every time we've done one of these exercises, I feel more like a well-rounded business owner and entrepreneur.
Bingo.
And I think it's the confidence that comes from that for me that is one of the really big benefits
I love that.
and assets that I'm taking away from this experience, because businesses come and go. You can scale. You can grow yourself really, really quickly with risk. You can grow yourself slower. You can take those make those calculated decisions. And what I'm seeing as we've worked through the beginning first couple of months here is it's good to take risks in some scenarios. It's good to be conservative in some scenarios. Finding a balance, I think, is really the biggest key to success for a long-term success, at least, because I do want to be an entrepreneur that is willing to take risks.
Bingo.
That makes sense.
Informed risks.
Yeah, exactly. And I feel like for me, though, it's funny to call those risks, because is it a risk if you plan every detail of it?
Well, it kind of is. So yeah, you're going to find that. And this is one of the things I think I say to almost every entrepreneur I work with. I think I've said it to you. So we're going to do a forecast.
Yeah.
And there's only one thing I can tell you for certain about that forecast. Yeah. It's going to be wrong.
Yeah.
It's going to be wrong, right? Because things aren't going to play out exactly as you plan. But here's the cool thing. When something doesn't, either it does remarkably better than we thought or remarkably worse than we thought, we'll know right away what we assumed that was different than what actually happened. And then we can tweak the rest of the forecast.
Gotcha.
Right? So that you're not going to ever run into trouble if you just have a 15-minute conversation once a month.
Yeah. I love that.
It's like, oh yeah, we thought this month was going to make $10,000 net. It made $12,000 net. Why did that happen? You know, oh, we put off a couple of purchase decisions, or it cost me less to do this than I thought it would. Okay, cool. So we know we can now assume a different level of income for the rest of the year. And that's kind of cool, because then it's still a risk, because it could be wrong.
Yeah.
Well, we will be wrong, but we don't know which way. And it's that's why I call it informed risk.
I like that, because to me then it's calculated. You know, like making calculated decisions for me is always the way that I lead.
Different level of confidence.
Yeah, and because you can go into those situations knowing that you've done the work and you've put the time in, and you don't have to stress about the unknowns, because you've planned for a lot of the unknowns.
Bingo.
And even if there are unknowns, you don't have to. It doesn't completely derail the train.
One of the things you've addressed to figure out what it's going to look like is going to be different than you thought, but you'll immediately know the impact it has.
Yeah.
Like be it price and quantity. Like I'm going to sell 5 of these packages for $10,000, and we sell 6 of them for $8,000.
Gotcha.
So you now have 2 different levers. One is, my price point's better at 8 because I get a higher volume, and I'm going to sell 6 instead of 5. So does that add up better or not? Well, not in this case, right? 6 times 8 is 48,000, and 5 times 10 is 50,000. So, you know, you can have those conversations, and it's about the actual story of the business and your business levers, as opposed to, let me check my bank account. I'm not sure. Let me guess at how much is going to come out of there and how much more is going to come in. We build all that into the forecast.
I feel like that it was really cool to sit down and actually do that exercise. I feel like one of the things that we had talked about is like the feelings of seeing certain things in this way. And I mean, for me, it wasn't that difficult, because I was sitting there just watching you go through, and you were asking me questions and talking through things. But I think that it wasn't what I was expecting from it, you know?
Yeah. Well, and the thing that I like about this is now it points out to us what the strategy needs to do.
Yeah.
Like we know what our initiatives are going to be when we have the strategy conversation. And we know what'll cost us money and what won't, and then we can just play around with how much do we want to attribute, or put aside for this, for marketing, for equipment, for whatever it might be.
Yeah. I feel like
fun times.
I know
Finance is
I'm
fun.
more and more excited. I feel like as we go through each of these, I get more excited to do the next types of strategy sessions in this way.
Awesome. Well, thank you for joining us. We covered a lot of different topics today, but the key that I really want to get to here is the fact that we've looked at the finances and the partnership, the fact that we're having this sort of year-endish discussion gave us the ability to actually pay the guy who's done most of the work this year, and that's what we're in this for. We're in this to extract value so we can use it to build value elsewhere.
Yeah, and it was cool. I think one of the things that we didn't touch on that maybe we save for next week is the taxes aspect of it, kind of like what we were talking about.
The old self-employment tax question.
Exactly, because that's something that confuses me, and I know that I'm sure it confuses a lot of other entrepreneurs as well.
Actually, just to tease that a little bit, and then we will talk about it next week. The question you asked me was, hey, if I pay myself this way, don't I have a self-employment tax?
Yeah.
And we'll hold that answer for next week.
So
because the answer is yes, and no, there's no difference.
Awesome.
So join us again next week. If this was of interest to you, like, subscribe. If it raised questions for you as an entrepreneur for some things you're dealing with as you approach year end, drop the questions in. We answer every comment, and we'll definitely get back to you with what you need to do. So in the meantime, we're recording this on Halloween.
We are. I'm sad that we don't have a costume on, but
yeah, okay. We did costumes on the She Said podcast.
You did. They were awesome costumes.
So they were. Thanks, Wen. Shout out to Wen.
Big shout out.
All right. You all have a great week, and we will see you next week on The Cash Flow. Cheers. Thanks so much for watching The Cash Flow podcast with us. We want to bring more and more of this to you, so please like, share, subscribe, comment, so that we can keep bringing more of this content to you.